Bitcoin just broke a 12-year trend against gold. And the reason has nothing to do with ETF flows, regulatory news, or macroeconomic data. It has everything to do with something most people still think is science fiction: quantum computing. In January 2026, Christopher Wood, a senior strategist at Jefferies, removed Bitcoin entirely from his flagship investment portfolio. He rotated that capital into gold. When asked why, he cited the quantum computing threat to Bitcoin's cryptographic security. That is not some fringe analyst making a speculative call. That is a strategist at one of the largest investment banks making a structural allocation decision. Google searches for quantum computing Bitcoin peaked at the exact moment Bitcoin hit its recent all-time high. Then, the market began selling. In this video, I'll explain exactly what the quantum threat is, why it matters now, how many Bitcoin are at risk, and what the market is pricing in. Here's the core issue. Bitcoin's security relies on cryptographic keys. Every wallet has a public key on the blockchain and a private key only the owner controls. Even the most powerful supercomputers would take longer than the age of the universe to crack a single private key using brute force. That is why Bitcoin has remained secure for 15 years despite being a global network worth hundreds of billions of dollars. But quantum computers use principles from quantum mechanics to solve certain mathematical problems exponentially faster than classical computers. One of those problems happens to be the exact type of cryptography Bitcoin uses to protect private keys. A powerful machine could reverse engineer them. How many Bitcoin are we talking about? According to on-chain analyst Willy Woo, approximately 4 million Bitcoin are sitting in wallets with exposed public keys. These are coins that have not moved in over a decade. Some belong to early adopters who lost their keys. Some may belong to Satoshi Nakamoto himself. The market has long assumed these coins are gone forever, supporting Bitcoin's scarcity narrative and high valuation. But if a quantum computer can unlock those wallets, 4 million coins could flood the market. That's 8 years of enterprise accumulation hitting at once. You might ask, if quantum computers are years away, why does it matter today? Financial markets don't wait for events. They price them and based on risk. Charles Edwards of Capriol Investments noted that search volume for the quantum threat spiked exactly at Bitcoin's all-time high in late 2025. Institutional investors are incorporating quantum risk into their models right now. They aren't waiting for the threat to be real today. Willy Woo argues that Bitcoin's 12-year valuation trend relative to gold has broken down because of what he calls the quantum discount. The divergence started exactly when quantum awareness entered mainstream financial conversations. Bitcoin is now being repriced against the store of value case. Christopher Wood's rotation into gold isn't fear-mongering, it's risk management. When major players reallocate based on a risk, that risk is priced. Some say Bitcoin will just freeze the at-risk coins through a software upgrade. But that is where things get complicated and politically contentious. A hard fork means changing the fundamental rules. It requires overwhelming consensus among nodes, miners, and users, which is hard to achieve. Freezing specific coins breaks fungibility. You're effectively saying some Bitcoin is different from others, undermining the entire system. It also breaks immutability. Rewriting the rules to protect certain balances contradicts the principle that the ledger is unchangeable. Freezing them is a form of confiscation without consent. These are ideological splits that could lead to a deep division in the community. Willy Woo estimates only a 25% chance of successful consensus. That leaves a 75% probability that the coins remain vulnerable to a future unlock. Alex Gladstein suggests a nation-state might quietly accumulate these coins. But the uncertainty itself is what markets hate. Before I wrap up, let's look at the other side. Samson Mow, CEO of January 3rd, dismisses these fears as overblown and calls it an accumulation window. Mo believes this is one of the final easy accumulation windows before the next major rally. He argues the technology is still years away. Ethereum has already formed a quantum security group and allocated a $1 million grant to study migration strategies. The industry is responding. Coinbase and companies like BTQ Technologies are already trialing quantum-resistant standards. Solutions are actively being developed. The transition to quantum-resistant cryptography will likely be phased over years, giving the network time to migrate without a catastrophic split. The question isn't whether Bitcoin can survive. It's whether the market will panic and reprice it downward before the solutions are fully implemented. Right now, the evidence suggests the early stages of that repricing are already here. The 12-year trend with gold has clearly broken. Markets are beginning to price in the quantum computing threat and the potential return of 4 million lost Bitcoin. The institutional shift is real. Google data shows awareness peaked at the recent highs, and capital is being reallocated to gold for the first time in over a decade. Does this mean Bitcoin is going to zero? Absolutely not. But your time horizon and risk tolerance now matter more than ever. If you're holding for 10 years, this could be a rare accumulation opportunity. But for fiduciaries, the uncertainty justifies reducing exposure. The quantum narrative is no longer fringe. It has entered the mainstream institutional room. Uncertainty will continue to weigh on valuations. I want to hear from you. Is the quantum threat real or just fear-mongering? Drop your take in the comments below. Are you accumulating at these levels or waiting on the sidelines? Let's get a discussion going. It's critical we all understand these risks. And subscribe right now so you don't miss updates. Quantum computing will be one of the most important stories in crypto over the next decade.